Welcome to On the Block in the very special episode because we are testing out a new format and we're inviting fantastic guests. And today there is Dominik Zyskowski with me in the studio.
Hi everyone.
And Jakob Bosshard online, who is an absolute expert on blockchain DLT applications in European Union.
And today we are covering topics such as digital assets banking, DLT infrastructures, and very vibrant Swiss Web3 community.
Let's get into the video.
Liechtenstein is the ideal kind of a place to found a neobank in that sense. Just by creating the token, you don't create liquidity, you still need a lot of...
Welcome, Jakob. Welcome to On the Block. I'm pretty sure soon to be the best blockchain and DLT podcast on the web. Thank you so much for joining us as our first guest. And I will start with the topic of pretty much your resume. I've looked into your LinkedIn profile and it seems like 3 careers. And I mean, if you can run us a bit as a intro, into like your profile and what you're into, it just seems that you are very much a professional consultant on the market.
Thank you. So thanks for having me here for this interview and talk here. It's really a pleasure to be with you here. And about my past, originally I'm a software engineer of ETH in Zurich, and I also started very technically and always get back to the source if I need to, because I love it, being close to technology. But then also I loved the bridge over to the business side, in conjunction that we have meaningful use cases that technology can serve. So I kind of always worked a bit on this interface between tech and business. I've been a long time in financial services. And then at one stage, I just felt, I have to get back to where the innovation really happens, where kind of the tech startups, the fintechs come and produce this innovation and serve it back to the old economy, to the old world, and making a move forward. So I got fascinated back there, not working for corporations anymore, but really for smaller ones. And that's how I also got an entrepreneur. And now I'm kind of a long time in the blockchain community for a number of years now, fully professional, done a lot of things in trading and custody, financial services, tokenization, token economy, etc. And feel very comfortable about it. And age and young or old is not a figure, I believe. It's a mindset. So we always shall think young.
It is.
And fresh and be innovative. The other one is just something that just passes by. It doesn't really matter, I believe.
Yeah, so I want to start by talking about 21X. It's a German company, pretty much the first one to get the license as a settlements, and trading platform, the first one in European Union. So can you give us a bit of an intro into, how it works, like both from operational and the customer perspective?
21X got the license on the pilot regime and my car back at the end of November last year. And we were the first of that kind of that trading settlement system, or let's put it a security token exchange, fully regulated security token exchange in Europe. And that's a privilege.
Yeah.
Of course, we worked hard for it. It's been a long time to get the license, but very fortunate to have it. And now we are in the final preparation of actually going live. So what does it mean? So it means, first of all, we're not going to be a crypto exchange. We're not going to be having any types of kind of DeFi tokens or whatever. But we have securities. That means products that from traditional market, equity, debt instrument, funds, whatever kind of products, we bring in a tokenized form to the exchange. That means we are an infrastructure provider. And that said, what we build in Europe is the secondary market. So we don't have that today. I mean, there's a lot of issuers out there, a lot of products, but usually it's traded like in a primary issuance, redemption scheme, over the counter. So people just have a relationship there. There is no meaningful secondary market yet, so we're building it and it's just about time. And for that, we've chosen a very puristic blockchain approach. That means we have an order book still. We have a central limit order book like an exchange should, but it's fully on-chain. It's in a smart contract and everything happens on-chain. That means the trading functions like a pair between the security token which is in this case provided on Polygon. And there is the fiat leg, which we don't need because we're using regulated stablecoins. Also with the micro regulations, we've seen a lot of regulated e-money tokens, stablecoins coming, and we use them kind of as that trading pair. So you can always be kind of on-chain. So the fiat on-off ramp somehow may happen outside the exchange somewhere, with treasuries of companies or whatever going to another exchange. But if you come to 21X, it's purely about on-chain. So that means you put your buy or sell order into the smart contract via a stablecoin or security token you want to sell. Then when the match happens, it's really a puristic atomic settlement, like we always knew we would have. So that means when the match happens, you get the other side of the pair and you're done. Everything's done. So there is no kind of, T+2 settlement and post-trade settlement and whatever. The only thing you might get then is some reporting on it, that we have send you some documentation, but the trade is done. So it's instant, it's kind of easy, and it happens on-chain. As we are used to with many protocols in the DeFi world, we get this now to this new type of exchange. And that shall give us the path to growth in Europe and beyond. And we believe that this is going to be the way to do it, and we're happy to be launching soon and creating this market of regulated security tokens. So we are a financial institute regulated by ESMA and BaFin in Germany. So we're fully EU compliant, everything. So it's a full-fledged exchange, but we are completely on-chain.
Yeah, so pretty much built on that machinery, you have created this new business model that's fresh on the market in Europe. So in that sense, would you say that working on such regulated market and regulations itself, it actually helps you to be a pioneer in the market?
That's exactly right. You put it that way. You often think regulation is sort of an impediment. You think, you have to go through the machinery and things. But here it's actually recognizing you as a fully fledged financial services institute, like a bank or a traditional exchange that is out there. So it's fully recognition. So people see, okay, you're on the scrutiny of the regulator. They look at you, they control you. So there's a level of trust that this institution is not just anything. So this is helping. And also this mechanism of atomic settlement is now fully backed by the regulation. It's not just something, we'll try it out and we'll do it. But it's a thing that says, yes, this works. We know it works. It shall be done. This is actually good. Of course, it's still that we are on the close scrutiny. So we're going to be watched. But that's, I think, is also the spirit we had under the pirate regime. We said we would go with innovation as fast as can and always a bit watch it, and adopt things. So I'm sure there are going to be a lot of evolving things in the future, and we'll adapt to those. But it's good to have the regulation in place. I'm really glad we have it, and we are recognized, and this helps everyone to grow. Also, the big institutes trading on us, on our exchange, they have trust because they see, okay, in the end, what's the difference to a traditional exchange? Technology, approach, but fully recognized as a regulated entity. Yeah. So yes, it helps a great deal.
So Jakob, since your platform uses stablecoin for settlements, can you explain in simple words what are the advantages of regulated stablecoins over traditional clearing processes?
Yeah, it's a very good question. So actually the stablecoins, we know them for a long time, don't we? We've seen all those big institutes, especially in the US dollar. In the euro, we haven't seen that many. There were already some around, regulated already kind of 1 or 2 years back, and now they're growing all with this micro regulation, which is great to see. So they're fully regulated. We also seen some vanishing. We've seen that some are delisting from traditional crypto exchanges now. But what it helps really, how are you going to achieve? You're going to stay with the trading completely on-chain. We've seen other schemes where somehow the trading pair is still okay. You can do an atomic settlement, but then in the background, there is sort of still a fiat leg or SEPA payment or whatever kind of happening. We've seen it with the ECB trials with the Banque de France last year. That they also achieved a great deal of a mechanism, but still it is kind of twofold. You have this atomic settlement on the investor side, but then on the back, it's kind of exchanging between banks the tokenized euro, which is fine, but still it is kind of a two-fledged thing. So we believe the stablecoin is the only means now to bring the fiat into the equation. If you want to trade a security tokens against a fiat representation, a regulated stablecoin is exactly what you need. And as a next point to say, stablecoins are becoming so much common. We do a lot of business cases with them. Use cases are unfolding. You pay maybe even salaries. You do, pay your partners, whatever you do out there. And then we think it's more a convenience. Also, you have stable coins, and now you also trade a security or two. It's kind of comes along. So there's also a synergy with what we believe is daily life more and more. And the good thing, again, to the previous question, it's regulated. It's not just anything. It's a stable coin that is under scrutiny, approved by the ESMA, approved by the regulator, and hence we're fully covered.
Mm-hmm. So do you think that stablecoin is kind of the answer to the problem of fragmentation of the European market, banking market? Because together with Przemek, last year we attended the Linux Foundation Decentralized Trust Summit, and many conversations were kind of focused on the problem of interoperability. So do you think that your platform somehow addresses the issue of interoperability on the European level?
It's a very good question. So interop is the big topic here on blockchain because we have so many protocols apparently, and there is of course
many currencies.
Yes, and many currencies. Yes, exactly. It's twofold. You're actually very right. Yeah. So it's protocol plus flavors. You have Bank A issuing that, and company like Circle and others issuing the other. And then how do you do? So in the end, we're gonna have probably multiple pairs. We'll see that probably can trade like you go on a crypto exchange. Maybe you can buy Bitcoin for US dollars, for Japanese yens, for Hong Kong dollars, whatever.
Mm-hmm.
And you might have the same thing. You can buy it for stablecoin A, a stablecoin B, maybe also a mix of euros and US dollars, or maybe other currencies coming in the futures. And also maybe in Poland you trade zlotys tokenized. Whatever you have, you could do that. On the other hand, also you have to make sure you somehow have an interoperability between chains. That's the other thing, because some tokens, some stable coins are not issued on Polygon, yet. There, of course, it's a common protocol. So then we have to cope with that, see how we can do, maybe use an interop approach like Chainlink or whatever. So it's various, but it's an exciting time. It's not a given thing which chain and what flavor. So it's going to be various. So we have to kind of also a bit find out where the way goes. But I'm sure it's not going to be one stablecoin. It's going to be multiple flavors. And again, a certain complexity for the investor. Also then, which one to choose? Maybe you have USDC, but then you want to go into an euro-based coin. What do you do? Is there instant exchange or something? We'll see, evolving. But it's a good question. It's a challenge, but we love taking challenges.
And regarding interoperability and old business, many financial systems today are pretty much built on legacy and are quite fragmented. And what do you think is the main challenge in transitioning from that state into like unified blockchain-based systems?
Yeah, it's a very good question. All this legacy. Also, colleagues sometimes tell me, "Oh, why do these participants all bring their legacy?" And say, "Look, this is just the way it is. We have to live with it." And they are evolving into the new world, and they appreciate that. So then you have to openly address it. You just say, "Look, how do you integrate it?" For example, custody. For most companies, it's new. I mean, of course, you can buy great custody solutions out there in the market. No questions asked. Don't have to then do necessarily your own MetaMask, or so you can do an institutional grade. Although MetaMask is a perfect solution, but some corporations need much more than that. You need to kind of support them there. So before they can really go to an exchange like 21X, there are some preconditions, and some players that have to help out to move to the new world. So we have to build this new infrastructure also on the corporate and institutional side. And that takes a while. And we see those institutes move slowly. It's a new world. Why do you have to do a custody? Why is the trading a bit different? But we teach, and like sessions like this help to make people aware. There's a lot of advantages to go there, but we have to cope with it, and slowly we get rid of the legacy. I believe it's a long process, but there's no way around it.
Yeah, and it's growing for sure. And I also read that analysts predict that tokenized assets could surpass $30 trillion in volume in 2030. And I wanted to ask you, what do you think? What types of assets you see being tokenized first in Europe?
It's a good question. So I also believe in this growth. So what we'll see practically is moving the capital market as is on chain. That's pretty much what we'll see. And I believe over time we'll practically have the majority of capital markets on chain because the advantages are so obvious. But it takes time. And what assets, so we've seen a lot of bonds, being tokenized, lately. I mean, you always people tell me, yeah, bond is boring. You have proven it works. And why should I go further? Of course, it's still a bond. It's great. And bond, usually, you buy them, maybe you don't trade them a lot. You can trade them, but you keep them till maturity, etc. And then you buy another bond. Most people have this kind of pattern. It's one bond after the other for a portfolio that you have. But now comes the next generation. We'll see a lot of kind of type of products which are short gain or have a yield bearing interest in the short term, like a money market fund, or we have kind of these things. You have a bit of cash on the side, maybe some stable coins or whatever, and you want to park them. Say, okay, generate a bit of yield, but not very risky. So you buy a money market fund. You go in for a week, for 2 months, for 2 months, and maybe in 2 months you have to invest in something and you need the cash again, but you want to have a bit of interest gained here, which is very securely and safely achieved. And money market funds are typical for that, and all the surrounding products that you also have. So that's one that we see a lot. And also what we see is that, again, those tokens buying into such funds can be collateralized again, for lending, borrowing on the other side. So it's a chain reaction of that. It's actually a great case. You first invest there, but then you have a bit of yield, but then you also have a collateralization into other products. Then, of course, we'll see a lot of funds. We'll see a lot of all kinds of funds that are out there. There's so many. There's addressing various topics, sustainability, whatever you want to do. You'll see a lot of funds moving ahead, and last but not least, equity is a bit more difficult, I believe, especially for the smaller caps, mid-size caps, to create liquidity in that. It's not easy because just by creating the token, you don't create liquidity. You still need a lot of participants. You need the right market we have to build. But I still believe also equity is moving ahead, but only, let's say, after the first two that I said. So as I believe, summary, short-term instruments like money market funds and funds in general are going to be very attractive for a lot of people to go in and out easily using tokenized securities.
Okay, and like closing the 21x section, out of the above, what do you think? And if you can tell us what's in the plan of 21x to capture that sort of growth?
You can play the efficiency card, of course. You can play that. You say, look here, we're atomic settlement. It's very easy to trade in and out. You don't need all the intermediaries if you don't want them. So you can always play that. But on the other hand, you have to come with cool and interesting products. So it has to be attractive from that. Always people tell, I can go to my e-banking and buy it. So of course you can. But maybe there's an attractiveness. You bring a new generation of products, sustainable funds, things that are really also cool by the products that are behind it. You can tell a story, and that helps us as well to gain traction. And then, of course, to grow really, we need large I call them multipliers, venues that kind of attract a lot of existing investors, side of platforms, brokers, maybe crypto exchanges and others that have this type of clients that, okay, I invest in cryptos, but now I'd like also to buy a money market fund or an equity or whatever I can. And this is kind of growing this pattern. And then we have a meaningful liquidity. And then once we are there, I think everything's possible. Now we have to just kind of go through that ramp up from zero liquidity today when we're not live to a meaningful kind of liquidity that is really kind of creating a good secondary market.
So I'm keeping fingers crossed for go live with 21X. And since we already started talking about the tokenization and digital assets, I think it's a good time to introduce sales from finance. So could you explain what sales from finance is and what it does?
It's another one kind of in the financial services world, which we're talking here. The banks play a vital role. So it's not at all the case that we said DeFi is going to replace the banks. We'll have just a different scheme of how we do financial service, but the banks play a vital role. And hence, we are about to have this bank also launched, but it's not a bank yet. That's why we call it Sales on Finance. We openly kind of communicate this on our webpage as well. We're not a bank yet. We are in the process of getting a license of our application in Liechtenstein. And we chose Liechtenstein over other countries because we believe now with the micro-regulation and the EEA combined with the EU is a huge market to have. Liechtenstein is the ideal kind of a place to found a neobank in that sense in the digital asset and crypto space, because then you can serve, you can serve back to Switzerland as well, but you can serve the entire EU market, which is a huge market, as we all know, including Poland, of course. And this is very, very attractive. And also Liechtenstein has kind of implemented the micro-regulation very quickly. So by the beginning of this month, 1st of February, everything's in place. Mm-hmm. That means the full micro-regulation also applies to Liechtenstein, which is great. Then we also kind of are in the journey of achieving that. But first, we have to get the license. So we're not allowed to do a business. We are not called a bank. We're just preparing this offering into the market. But we believe that banks with cryptos, with digital assets, play a vital role in this entire ecosystem of liquidity, attracting clients, moving over from the traditional world into the new world. And we believe there is a lot of room for banking services.
So do you think it's easier to obtain the license in Liechtenstein rather than firma in Switzerland? Or is the same amount of work that's needed to be done?
It's always a lot of work, Dominic. It's always hard to compare. Is this pie bigger than the other you have to eat? I don't know. They're both kind of heavily putting such an application on the scrutiny. So it's still a bank, is a, let's say, very, very elevated kind of license. It's always been. It's also quite, I'm not saying that 21X license is not a big one. It's a big one too, but banks are especially on the scrutiny because there's so much exposed to the clients and investors that are dealing with the bank. It's such a vital part of our ecosystem that they want to have a lot of scrutiny. And also these days, I feel a bit the regulator is quite careful. We've seen it, for example, in Switzerland, with the disaster we had, unfortunately, with Credit Suisse and others. And also in Liechtenstein, they have seen some things happening. They're very careful. It takes a bit more time, we believe, also because they are also on the scrutiny, the regulator itself. If they do a mistake, in allowing someone, then again, the blame's back. So we understand them. They want to really do a good check. They want to see who are the people working with the applicant, etc. So it takes time, but comparing the two, I would say probably they're the same magnitude. It's always like also with the BaFin and the ESMA, they all have a similar scheme, I would say. Of course, there's differences, but still, it's a huge uphill battle. But it's worth it. In the end, you get out and you have the license, as you mentioned before. It's a recognition into the market, and you don't want to skip that. So there's no way around it.
And looking at the timeline, so when do you expect your license to be secured, and what's the first major feature we should expect to see?
So it's hard to tell, that's the other feature of the regulator. They don't tell you when it's going to happen. No blame or anything. We understand where they're in, but there's certain time limits. So we expect that to happen, not too long in the distance of the distant future, but we cannot tell and we shouldn't tell. So there is something. But once we're preparing, and once we get the approval, then of course we'll get live as soon as possible. So soon, hopefully, we'll have a set of clients that we can serve. So maybe a bit of the segment. Let's say we put a bit the conjunction with DeFi that we had, and DeFi, of course, is a bit contradictory to banking. But let's say we want to be a bit the future DeFi bank. That means we make everything possible for a client to do, which is regulatory compliant, So we want to kind of offer various things, that we're part of the ecosystem, we're supporting the ecosystem here, and we're kind of and not just kind of serving individual clients, but also a bit kind of part of the entire blockchain community of the bigger thing. And we have to kind of, for that, you have to kind of establish first the basis. So we have to offer custody, you have to offer a very sophisticated trading interface. We'll also do the fiat part, because we will have clients, corporate clients coming in. They still have to do payments in fiat, so we won't be a sole crypto digital asset bank. We cannot. Of course, again, stablecoins play a vital role, but still you have to deliver some of the old world also. And this is a combination. So we feel that it must be something in the middle, and then we grow. The regulator will allow more and more, and we want to be at the forefront there. We offer more and more services that we just talked about.
Okay, and on that part and the ecosystem and especially digital assets, the market, competitors, what other banks do you watch?
You come from this tier level, tier 1 to tier 5. Tier 1 is kind of the big banks moving into it. We see all of them, so are at least evaluating or coming in. So then, of course, you have those big established ones who have a huge set of clients, and then they start offering these services. I think for them it's also a hard battle because they have to somehow, get into a new stand, a new type of business. It's not easy to grow from that. We have this advantage of being more on the neobank side. So we have a fresh start. We come from nowhere, we just created everything out of thin air. And have this privilege that we can optimize processes to begin with on that business, And then, of course, there are some other neobanks around it. In for example, Switzerland, we've seen Sigrun Bank and Amina, which are already running for almost 5 years now. And I wouldn't say they're in that sense competitors because the market is big enough to serve here. And again, then we have the advantage of being in Liechtenstein that our market is so big, But it's the likes, I would say more the competition is more on that side, that we have a large set of smaller banks that are growing very fast. And we believe there's going to be a lot of such banks in the future. We don't think that the large ones are really a competition because they serve a different segment, they have different services. So we have the privilege of kind of starting fresh with a full offering that fits the community.
So Jakob, you mentioned those big old banks that are kind of serving clients for many years now. And do you have any recipe how they can catch up with the latest trends on the market with innovative DeFi products, and on one side make their clients sure that their funds are secure? So they need to take some kind of time to think about, from one side, innovations, but to also comply with the security of their finances. How these banks should innovate in the field of blockchain and digital assets.
I agree with you. Yeah. It's a long journey. I mean, first of all, I think these banks need to have an infrastructure ready. As I said, custody, trading, the compliance machinery, just the basis kind of for all. That they can offer anything. And most banks do that. Either they do it themselves, so the bigger ones just buy a solution from the market, custody solution, institutional grade, maybe cold storage, etc. They have sophisticated trading interfaces that they can do kind of, trading algorithms or kind of smart order routing or whatever kind of, have different trading venues they can shift between. So that's all in the market and you can buy it, and then you would integrate that into your core banking system, which is also a bit of a challenge because, the big banks usually have a proprietary core banking, old style, maybe still running on mainframes and whatever. So not an easy thing. We've seen it. I mean, that's a solved problem. I've seen it with the digits after the comma of Bitcoin and Ethereum. Not an easy thing. It's just simple mathematics, but still you have to resolve all these tiny bits, but which most banks have managed now in the meantime. And that's the basis. And then, of course, they have also go to the regulator. They have to announce their plans, etc. And then I think it's taking already a lot of time because they have to convince the management. Usually this comes out of an innovation team, maybe some business people are convinced. Then you have to convince the CEO and the board and the strategy. So this takes all time because most of them are public companies, listed companies that need to follow all these governance rules. And that takes time. We understand that. But I hope that they will kind of keep up now on the speed, and accelerate. Also going to digital assets in terms of tokenized securities, that they offer that, tokenized funds, etc., which is gone, that they go into the stablecoin, that maybe they start, collateralization of products, that they do more and more, which is all possible. And then also create this new standard that one day will not have the old and the new world, but we just have a new status quo. But that's going to be taking some time, So
they also need to educate their clientele, because their clients are usually coming from the traditional they are used to traditional finances. They are not Web3 natives or crypto natives, and probably they also need to be somehow convinced how to use the products and what are the benefits of the new offering.
True. That's true. It's a very good point. By the way, that's also something I think everyone in this call does. You educate people outside our community all the time. And it's a mission we have to do. Not just the banks have to do, we all have to do it. Let's say this magic blockchain is not so magic in that sense that you cannot touch it, you can understand it, and how is the mechanism, and it's something very good to have, if you do it the right way. So I think it's a constant thing. And also banks, I agree with you, it's a long journey. They have to educate their clients on the portfolios and on the products, etc. But I think that's joint community work, isn't it? We all have to tell people out there, why is this innovation so good? Why do you think you should deal with it? And this is something will go on for quite a while.
So those institutions are not longer treating blockchain simply as a technology behind cryptocurrencies, but instead they are examining how DeFi can streamline payments, loans, custody. From my knowledge, I know that many banks have conducted countless blockchain POCs, and many of them fall short of expectations. So what key factors do they often overlook when testing new blockchain products or services?
Yeah, I think the thing is a bit, that, as you say, POCs are done quickly, then to do a bit, they have a few successes. You can trade a Bitcoin like we do every day on a decentralized exchange or whatever, very easily in a second or two. And then they don't think beyond. So I think they need to have sort of a vision. Where do we want to go? And have a bit more, let's say, courage to move on, and say, okay, we're going to be issuing products, we're going to be security tokens. We believe that stablecoins are a new means of payment, so we integrate stablecoins into our payment flows, etc. So they should be more willing to jump, say, okay, let's get to some use cases. So I often see that they just do the first step and then they don't think beyond, just say, okay, great, we've done the breakthrough now, and you can trade now the 10 best coins on Coin Telegraph on CoinMarketCap. And that's fine, and then they're satisfied, and then I think they should have this vision of a for long-term player that evolves continuously, and that's hard to achieve because banks work budget by budget. Then again, after the first wave, you have to queue up, and why do we need to expand now? We've done now cryptos. Why do we have to move? It's all this again. This talk starts, and that's hard to achieve. So again, we need convincing power from a lot of people.
But on that note, I have an interesting thought. We've just published a State of DLT report, and we talked to several, CTOs, CIOs, people in the financial services industry, and majority of respondents said that DLT is actually within the strategic direction for their companies for the upcoming years. Is that a surprise for you? What do you think about it?
No, it's actually not. If they come up, it's so obvious. If you look at how big blockchain already is and what we have achieved, you often forget. When we came from nothing to today. The ecosystem is huge. If you just look, just looked again at the. I'm sure we come to talk to Switzerland as well. The Crypto Valley Venture Capital Top 50 report from last year. It always comes out in January at the WEF in Davos. And it's just astonishing if you just look back a bit what happened the past 10 years. It's tremendous. So So I think, and probably you concur with that, we cannot skip it. We've created a reality that is so big. I don't think it's going to vanish. That's why people say, okay, it's there. The innovation is there. We have to deal with it. Let's be part of it. Let's get involved. Let's buy Bitcoin. Let's go into the new world. Let's create meaningful use cases.
And still, like, we see these two camps, people that are all in and people that are totally against. And, like, if you look at different roles within the financial institutions, what sort of roles you think are the hardest to convince that this is the direction?
It's the risk and compliance team, I tell you, because they always say, yeah, but there's always this comma, but, and then a long sentence, and only one little sentence can kill the initiative. It's it's too risky, because we have to have enough equity, to back it up. Or, what if we are hacked? Then we have a huge exposure. We're going to lose all the assets, which we've never done in the traditional finance, because we have a CSD that is regulated by the state. It's all of these ifs, and then you have to kind of battle them with arguments, which is sometimes hard. If someone poses a risk, I'd say, okay, this could happen, and I'm convinced it will happen someday. Then it's harder to argue why it wouldn't happen and what you do. So it's, again, I think we'll manage, but we have to do a lot more homework, and you have to do studies, etc. For example, now giving one from 21X, we had to talk a lot about with the regulation on finality on the blockchain. If you do atomic settlement, the question is, when is the trade actually sealed in and everyone has the same state? Of course, for us, this is kind of obvious, but still, this question alone, is it a risk that the investor has accepted, but it's not final? We know this gap. But still, some people would say then exactly, this is too big a risk. It's not final. Oh, okay, it can still, something can happen. And others say, this is just how the blockchain works. And with a high probability, everything's good, and this is the kind of discussion that you have. And you have to have it. There's no way around it, but it's hard, because someone posed that question. But if one trade doesn't go through because finality doesn't reach it, it's never in the state of the blockchain, what do you do? Then you say, okay, you have one case. Maybe you lose a traditional asset as well sometimes, and you have to do a recovery mechanism. But this is the kind of discussion.
Yeah, look at more traditional ways of doing that, right? I guess mistakes happens as well, and and also if you look at the systems, banks pay these fines not for a specific reason, right? It happens as well over there.
Yeah, so Switzerland is the country of banks, of banking, but it also has a vibrant crypto community. So we recently published a video about the Swiss crypto market, and before I ask you a question, Jakob, here are some quick facts for our viewers. So there are more than 1,200 blockchain-related companies, and crypto companies are valued over $600 billion. Most of the brands that make up this market are based in the canton of Zug, also known as Crypto Valley. Jakob, from your perspective as a local, how do you think such a small region just outside Zurich attracted the innovative and dynamically growing market? Probably it's a long story. Yeah, probably it's a long story.
It's a long story, but still a young story if you think. We just celebrated, 10 years of the Ethereum Foundation, which was actually the basis. Ethereum gave, as you know, the story. Maybe we celebrated this back in October in Zug at the CV Summit, the big event, and we had representatives of the Ethereum founder team, which is great. They came to Switzerland and wanted to evaluate the setting here. And then that was the beginning when a law firm here kind of told them they should do a foundation, a special legal vehicle here in Switzerland, which is very well protected. It has also some tax optimization, but still it sets certain close boundaries on what you can or cannot do. And this proved like a very ideal vehicle, which is still in place, and a lot of other protocols then followed this. And I think this was the beginning. But still, like always, you have to someone see the innovation, not just, again, like per the previous discussions, there's a risk of having this type of companies in your country and what happens. So someone in the canton of Zug just said, it's good to have this innovation, let's go ahead. So the regulator and the canton of Zug, which is, it's not a big part of Switzerland, but it's a very...
So do you think they took a big risk or not? They just kind of...
A bit, of course. It's always, there's no risk, there's no gain, but
Sure.
I don't think that they played a huge risk. In the end, it was still, it's a financial vehicle, it's a foundation. What can go wrong? They can go bankrupt, and then what happens? It's not going to destroy anything. It's gonna be a loss for some people. But still, when they started to kind of propel the ecosystem, etc., supported local people who saw the same opportunity, then the founders of the Crypto Valley Association and everyone then came, created this ecosystem, attracted others. So they've done a good job, but they were supported by the state. They kind of said, they invested also, created this ecosystem, and then it had a good basis to grow, which is, it's a team play. You cannot just have the innovation. You need the state, you need financial institutes, you need all kinds of experts there to create this. And I think Switzerland always had a good base for that, also because we have the big two technical universities, the ETH, in Zurich and in Lausanne, which kind of play top 10, respectively top 20 on the planet, and they produce a lot of good talent on top, plus the financial services sector, etc., supports it. I think it was a good ground. So Zug did a great job, in various things, and that's we're all very happy we have the Crypto Valley here in the heart of Switzerland.
Yeah, that's why, so many of these locally born startups also grow, internationally and are recognizable brands. And, looking at this locally still and Zug in Switzerland, what do you think are the sectors or industries that can benefit the most from this environment?
Yeah, it's a very good question. As you say, it's in various directions. I tell you, if you again quote the CVVC report there, it highlights it very. I recommend reading it. It's really a good picture of where we stand here. It's various things. We've seen, as I said, the protocols are very strong here. So we see innovation in the heart of the blockchain itself here. Also believe there's more exchange between the protocols in terms of ideas and etc., which propels again the ecosystem. Then of course we already talked about financial services, which is a lot there. On the other hand, we see a lot of the innovation also in the sustainability. I see kind of tracking, kind of creating token economies in tracking the originality of a product, supply chain management. We see a lot of cases, and also we see a lot of sustainability cases in energy, for example. Token economy, creating, you pay energy, but you also invest in closed circle energies, that produce like sustainable through wind or fuel cells or whatever, which are propelled heavily. Kind of we create new ecosystems there. So there's various aspects of that. It's not just financial services, which I'm closest to, but I see a lot of good things going on. It's quite diverse, and the good thing is, if you are in the Crypto Valley here, you always see something new, like every day. So there is so much coming on, new people. I haven't seen your case yet. And you talk, you meet people, you feel it's so vibrant. And that's the good thing. It's constantly evolving. And that challenges you every day to learn and see new things, which is very exciting.
And, at the end, we have this little game we'd like to play with you. So rules are simple. I will just ask you one question at the time, and I will ask you to answer with one word only. Is that okay?
That is fine.
If you want, you can always skip the question if you want, but let's try to do the whole list. The first one is, what's the most exciting blockchain use case?
Very good question. 1 second. I would say stablecoin.
Okay. What's the most overhyped blockchain use case?
Very good. I would say meme coins.
Okay. What's the biggest reason banks are entering DeFi?
Secure the future, or just their future.
One word to describe current crypto regulation.
Complicated.
Will every major bank have a blockchain division in 5 years?
No.
One word to describe the future of finance.
All DLT.
Perfect. And thank you so much, Jakob. And before we let you go, we also wanted to ask, Looking at this format and what we do on the blog, what do you think, who should we invite for the next episode? Someone that you actually know and you feel would be a good fit for the show?
Yeah, of course. I think if you want to more do about the Crypto Valley, you could interview, for example, Amy Lawrence. She's the president of the Crypto Valley Association. She has a broad overview. Maybe you've got her on the radar. She works for Talos. Happy to introduce her to you. I mean, she's a great person to talk to. She's seen so many things. She really pushes. Of course, we all push the Crypto Valley, but she's kind of institutionally at least at the head of the association,
Perfect.
which is not everything of the Crypto Valley, but a big part of it. So maybe you want to interview her. I would also say, of course, I mean, you wanna have some of the protocol foundations, which is great. If you talk to the protocols, thinking of, for example, Solana, Near Protocol, or whatever, that you get really the head here to speak. This would be great, but can you get that part? I think we have to always a bit consider the foundation we stand on, kind of what's going on, what's the future. I think there would be things that would be two people. I could Lily Liu, for example, from Solana. She's the CEO of the foundation. She is also in the Crypto Valley, and she's very approachable. And why not talk to her? I mean, Solana is a emerging protocol. We know it. They've done very well, and they still grow like crazy. And on the other hand, more someone from the Crypto Valley, like Amy, which is a good friend of mine too. And she really has a broad overview of what's going on. If that is two angles to go on, there are many more.
That's perfect.
Two immediate ones for you. I'm happy to introduce as well.
Intuition is usually right, so I guess the two proposals are actually good. So we will definitely reach out to you if that's okay to get us in touch.
Please do.
Okay, so to our viewers, if you enjoyed this video, you're going to love the one over here, where we break down the Swiss crypto landscape and explain why Switzerland is home to so many crypto companies. Thank you, Jakob, for joining us today and sharing your insights. Thank you for watching. Remember to stay on the blog to stay ahead.
Hi everyone, it's Przemysław here. Thank you once again for listening to our interview with Jakob Bosshard. I hope you've learned as much as we have about the new opportunities blockchain provides for money markets, but also about the rapid growth of the Swiss crypto valley. Let me know in the comments what are your thoughts on this new podcast format, and make sure to subscribe to our On the Block channel, as we plan to publish a video explaining why Switzerland is home to so many crypto companies next Thursday. In the meantime, you can watch some of our other videos on YouTube or read our latest report on the state of DLT 2025. The link is in the description. Bye bye!